Hey, friends, it is, I gotta adjust the boom. It is Friday, 3 o'clock, and it is the final hour to expiration. And this is when we do the trade, the zero DTE trade, on the final hour of expiration for options on the S&P index. We do this every day, Monday through Friday, unless there's a holiday, of course. And we're currently on trade number 33. That's correct. I need. I thought I was talking to this camera. You were listening to the back of my head. All right. So I'm not a video producer. Got lots of video cameras and stuff, but I'm not a very good producer. But anyways, this is episode number 34. That means we've done 33 trades. Our record right now is 21 wins, 6 losses for a win rate of 78%. We've had 6 no trades. Now there's a little asterisk on that 6 because yesterday, I guess technically I didn't take the trade. But I did call it, and I fumbled. I was busy. The sun was in my eyes. The crowd was yelling at me. I think there was an earthquake, and I missed actually getting into the trade. However, everybody else in the group came in and got into the trade, and it was nearly a pin trade and made lots and lots of money. So I'm putting that as an asterisk because, now if I had called it and didn't get in and it was a loser, then I would count it as a loss, just so you know. But all the other trades that were non-trades, they were legitimate non-trades where there was no trade and just decided not to trade. And that very well could happen today. Who knows? So that's how we had a discussion about this in the group to talk specifically about this subject. How do you record those types of trades? Because it wouldn't be right for me to say that it wasn't a good trade because it certainly was, and people made upwards of 400 or 500% on their risk. So how can you count that as a non-trade or a loss or whatever? So, but there is an asterisk that I personally didn't take the trade. I showed you my fill, well, not my fill, but my order, but it never got filled. Oh well. And, every time I take a trade, I try to show what my fills are, both entry and exit, in this video, so everybody knows what's going on. And, okay, so we have a bunch of people showing up. Hey, we got Dan and Carlos, and let's see, we've got, profile shot. I know. I had it all planned. I was going to do the introduction from here. It's got the really kind of neat little lighting here. And then once I made my point, I was going to switch over to this camera and give you like all this fantastic video effect that I completely failed at. Oh, well. So, yeah, Jago is getting a laugh out of that one. Thank you very much. I deserve it. I know. Oh, God. Very good. How you doing all? All right, glad you showed up. Thank you very much. Thank you. Not much, Brother Zach. I want you to know that years ago, when I first started getting online, that my pseudonym was Zach, short for Zachary Bass. That's a whole nother story I'll tell you sometime. How you doing, Hervin and Shreem? Everybody's here. That's fantastic. So, I deserve any criticism that you happen to give me. At least I can make proper use of the cough button. This time of the year, I never had allergies, but now I am suffering from allergies as I grow older for whatever reason. Never had a problem with them. But all of a sudden, the last couple of years, they hit me like a ton of bricks, and I get all this, stuff. All right. So earlier today, we took a trade, And that trade, well, first of all, you should know what had happened. What had happened was what is really the story. And what had happened is, explained right here on the economic reports. You can see that we had the CPI today at 8:30, and it was a shocker. maybe to the people who were reporting the CPI or the government or maybe some of the mainstream media, they were really shocked, but we weren't shocked. The fact that inflation now is 8.6%, so they say, which happens to be really the big lie, because we really know where inflation is, right? If you were to measure inflation the way they did back when we had, quote, peak inflation back in the late 70s, early 80s, when it got up to 15%, if you use those same standards, which were legitimate standards, now they use all these heuristics and substitutions and all of this other stuff for political reasons to make inflation appear lower than it is. But if you were to use those same measures that they used back then, inflation would easily be topping 20%. And you all know that that's exactly where it is, right? You know, I know. You go to the store, you buy food, you pay for gas, you know. Anything that you buy online, everything is up at least 20%. That might even be conservative. But anyways, getting back to the report, we can see that CPI blew away the expected numbers. Core CPI is up. Everything is up. This is horrendous. Of course, then also the preliminary U of, I think, is that Minnesota? I can't remember, but, or maybe it's Michigan. Consumer sentiment has fallen off the cliff, the proverbial cliff. And that ain't good. Inflation is going to extract an incredible toll on this country over the coming months. We're between a rock and a hard place, and we were put there by the malfeasance and the idiocy. And you have to know that the people at the Fed, they are either incredibly stupid or they are incredibly mal-willed, or I guess that is a euphemism for evil. But what they're really trying to do, I think, is they're trying to create a situation that will prevent them from actually raising interest rates, because they simply can't afford to do that. The reason why inflation has gone rampant is not because of the Ukraine war. It is not because of supply chains, although those things tend to add to it. Because inflation was already out of control for the longest time. Remember, they called it transitory? And then once they retired the name transitory, now they're using the word peak. And now that peak, now that it's no longer a peak, as you can see here, they're going to have to resort to another explanation for their idiocy. And it is their idiocy. They have caused all of this, and now we look to them to actually fix the problem that they caused, which in of itself is idiotic. It's amazing that we keep on allowing these people to do this damage to our lives and to our country. But anyways, that's all another story. But what I'm trying to say is that they're stuck between a rock and a hard place because they really can't raise inflation, raise interest rates. If they raise interest rates, every point that they raise interest rates, it's going to add another $250 to $300 billion to the cost of us servicing our debt. Already it costs around $250, about $300 billion a year just to service the debt. Now, if it costs an additional 250 or 300, where's that money going to come from? Where? Are they going to print the money? I mean, that's what's causing the inflation in the first place. So I think what they're trying to do is they're trying to manufacture or engineer a controlled crash, and it's going to quickly get out of hand. There's no way around it. It's the only way that you can actually, well, I mean, they could raise interest rates dramatically, but they know that that will kill industry and cause a recession. Either way, I believe we're going into a recession. I think they believe that they can ease us into a recession. Can you imagine that, being eased into the fire pit? Sounds so delectable. So anyways, that's the situation we're in. Does this affect us as traders in the zero DTE world? No, because all of these problems are, while you may get big, huge moves like today, we get this big, huge move down that it is now threatening to go into bear territory again. It really wasn't a threat to us. As a matter of fact, it presented a little of an opportunity to grab some money out of the market. Generally, we're in cash, and then we deploy our money in a very risk-averse way, tiny little risks, looking for outsized profits. And today we called it right, and we're able to grab a little bit. I think generally most people probably made between 40 and 70% on their money. And so for us, that's a tiny win, because usually we're used to triple-digit wins on our trades. And that's okay. So now, let me explain. Let me show you what the call was, and we'll go over here. And I need to back out. This is a 1-minute chart. Let's go all the way out to about an hour and resize everything. Okay. So this set of arrows here I just drew just a few minutes ago. But these arrows here, this one, I'm wondering how, does this come out right on the, I think it does. But anyways, these right sets of arrows going from T0 to T1, that was the call this morning, prior to it actually dropping like that. Now, the additional move that I think is possible, and that's what we're hoping for right now, is this kind of retracement up to one of these LVNs here. And so that, we were all wondering when we were finally going to break out of this 9-day consolidation after the bear market rally, which I've been talking about every day. So we finally did that. We broke out, dropped hard, and now we're threatening, absolutely threatening, what you can see here, which was the low point, a multi-month, almost more than a year low point in the market. That anything below that represents a 20% retracement or 20% correction. In other words, anything below 20%, I guess technically or officially, is a bear market. We had a bear market rally once we dipped into that area, came up very quickly. Bear market rallies do that. They rip higher, and then we consolidated for 9 days, and then finally today we broke out of that consolidation and dropped hard. And that was called prior to it actually happening. And if you go back and you look at any of our videos, you'll see that our analysis is typically pretty spot on, where I would say that we're about 85% right in terms of direction and magnitude of direction, or what I call the vector of the market. Okay. So that was the call for today. And let me show you the situation that we're in. All right. So we came down. Now this is kind of a compressed view. We'll zoom in a little bit more. So there you can see the trade that we had was a narrow butterfly centered on 39.10, I believe it was. Yeah, 39.10, which is right about here, and 10 wide. So that was the trade, and it came down, and it actually stayed right inside of that profit tent of that butterfly for most of the day. And in fact, it's still within range, and we could, in fact, pin that trade today because look, we're at what? We're only 18 points away, so we could easily drop down into there, right inside there. But anyways, we all took profits, so we're all out of this trade. We took profits right around this area where the T1 label is, right around there. And then that's when I drew these arrows, in fact, and I said that it looks like now our next move is either breaking out above the T1 node or breaking down below it. And I think that breaking up is probably the more likely case, and really because, I'm not a really proponent of this type of talk, but a lot of people say that gaps must be filled and so forth, but this gap is so huge that it's hard to imagine that there isn't some kind of agency out there looking at this and recognizing that you just can't have a gap like this. I've never seen a gap this big on a daily chart. Look at this. Look at that. Just look at that. Will you look at that? Just look. Oh my God, look. It's huge. It's a huge gap. I went back. I couldn't find another gap like that. It's unbelievable. And for that reason, I get the feeling that there are so many people out there that have fill the gap nerds and some of them with real money, and maybe even, I don't know, maybe some institutions are feeling like they got to fill that gap for whatever reason. And it's not because it's a gap they have to fill it, but I'm sure that there are trades that are left hanging, and inventory that they need to collect. So that's why I think that we're not going down further today. We're going to be going up, and now we're developing a little tail on the bottom here. And we're trying to break out now. So the trigger points that I pointed out to the service, the 0-DTE.com service, is that we either break out above the T1 or below. Now the below breakout would have to get down to this LVN, which is situated at about 3890 or so. So you would have to get down there and break below that before we took action. This breakout, I'm telling people that it's really at the top line of the T1. So if we can get above here and start moving, then I think an appropriate target would be this LVN situated here at about 3980. All right. So that would be the trade. Now, there's no sense in putting this on right now. I mean, we could get a really good price if we put it on now. Probably, I don't know. Let's see. What kind of price could we get if we put that trade on now at 39.80? Let's go to the SPX and take some of these trades off. So this was the trade earlier today, and most everybody was sitting right inside of the profit tent in here, and most everybody got out. Now it's starting to move away from it. So let's readjust that. Well, we'll make it a call because we're going north, and we wanted to go to 39.80. I said. And we want, I don't know how wide, let's try 20 wide. So we would go to 39.60 and 4,000. All right. Man, you could get into that trade right now for 70 cents. Now, most people probably made around $70 or more on their trade this morning. I don't know. Is that what you? Well, no, it wouldn't be 70 cents. That's locked. It's $1.30. Well, there you go. $1.30 for potentially a $2,000 profit minus the $1.30 would make it $1,870 potential profit. So if we were to then, do the math on that, let's bring up the calculator. All right. So I'm just bringing it over here so you can see it. There you go. So we have a 20 wide spread, and that gives you a potential profit of $2,000. Then you have to subtract the cost of getting in that spread, and right now it's about $1.10, so that's about 110. Let's call it $125, right? That would give us $18.75. Now we divide that 125 into that to give us our risk to reward. That's a 1 to 15 risk to reward. Those are the type of odds that we like. So, yes, I'm showing that. Those are the type of odds we like, because that means that for every dollar that we deploy, we could potentially make $15. More than likely, we're going to make some sort of something in between, some spectrum between 0 and that. And that's typically where we land, somewhere around 150 to 250%. Every once in a while, we'll move inside the tent and we'll be making 400, 500%, sometimes as much as 800. We have shown at least one trade here that where we've made 800%, and some members actually made quite a bit more. So that's possible. But that's a long ways to go. It really is a long ways to go. And I'm not sure that the market is really up to it right now, to tell you the truth. We need that breakout before we commit to such a trade. And so there's the breakout that we need. Let me zoom in on that a little bit. We can probably go to a 1-minute chart here and get a really close-up view. So you can see that that's where we're at. It's trying to break out. It's tried 1, 2, 3 times and failed every single time. So that's the trade for today. The trade is upon triggering, getting above, I would say getting above this 39.35 area. You know, maybe if we hit 39.40, take this trade right here, which would probably end up costing, now we don't have to take a 20 wide. You know, we can take a 15 wide. And take that trade and target right there. The other possibility is you could go closer and go with a narrower spread and get a pretty good risk to reward. So for instance, if we went to, it would increase our profits and our probability of touch. So for instance, if we went to 39.60, we'll make that 39.60, and we'll make it, say, 15 wide, and just see what that gives us. And that's also $1.15, but that's 15 wide minus $1.15, so for $13.85 potential profit. Again, still like a 1 to 13 risk to reward or something along those lines. But the key here is, you know, what is the probability of touch now getting to the short leg? And the probability of touch getting to that short leg right now is, we need to get the probability of touch up here. So getting to 39.45, it's right here. And the probability of touch is about 50%. Those are the kind of odds that we like. Anything, you know, around 50% or more are the type of odds that we like. So that is definitely within our wheelhouse to put that trade on even now. Of course, while I'm talking, it's probably breaking out, isn't it? Yeah, it's just starting to. So there you go. So let me see if I can set that up. I need to put that in here. 39. I had 39.60. I'm going to go 39.65. And that's a call. Open. 2 contracts. 39.65. I put 39.60, didn't I? But that's kind of close. Let's see what we get with 39.65 and see what we get. So we get 39.65, 39.50, 39.50, and then on the high side would be 39.80. Come on, Ernie. There we go. What's the cost of that? Oh, that's pretty expensive. $1.93. Let's go 10 wide. Because once we start moving up into that low volume node, price is going to be moving pretty quick. And all we really care about is to get close. All right, so that's better. That's 85 cents. I'm putting that trade on because it looks like it's going to break out. And we'll see if I fill that. So again, the trade that I put on was 39.65 and 10 wide. Doesn't sound like much. I put it on for, well, let's see. I don't even know if I filled. I didn't fill yet. I put it on for 85 cents. I might have. Because even at this price, at 85 cents, that's better than 1 to 10. So I could go up a nickel. Let's see if I'll go up a nickel. All right, I'm good. And we'll see if that works out. It's really moving. I need a pullback. A little bit of a pullback. It's telling me the natural price is 95 cents. Now it's 90. But, price is fluctuating all over the place. Now it says it's $1. We'll go for the dollar. What the hell? Because I think it's going to move. Let's see if I get filled this time. So I don't want to be stuck in the... Yeah, I got filled. So I got filled. I don't know if that was was that a desperation move? Chasing that? I don't think so. It's a 1 to 10 trade. All right, let's see. There are lots of comments here, I'm sure. Shreem says, yeah, I remember Investor in the Wilderness. That he's referring to the Zach. Zachary Bass. I got to tell that story sometime soon. So should have bought a put overnight. Saw this coming. Yeah, shoulda, woulda, coulda. I gas up and shop. I'm not shocked. Okay, so yeah, you're there. I don't shop that much. My wife does all that stuff. So Alan says a serious Fed would hold an emergency meeting this weekend and raise rates 1 point on Monday. That's true. Remember what Paul Volcker did? I mean, he just opened the floodgates on rates. And that apparently helped. Thank God for Putin's war. We have someone to blame. Yeah, I guess. Brian Forbes says, everything you say is right on, but stocks will surge next Thursday and Friday because of what you and I have discussed. Oh, it's a secret! And let's see, we got another. Why not take the trade now and give away price? Once it breaks out, it will double. Yeah, but see, I took it, and then as soon as I took it, it pulled back. Right? Look at that. Look at that. Just look. Look, it's going to go back down. Is it going to go back down inside T1? Don't go back inside there. See, that's me. That's on me. That is definitely on me. I think it's going to, turn around. There's 30 minutes left in this market. So other people got in a little bit better than I did. In 1983, my first mortgage rate was 17.5%. Can you imagine that in 83? Because I remember you could get a bond, a 10-year note. A 10-year bond. You could buy a 10-year bond with about 15% interest. Isn't that crazy? That was the difference back then. They were serious. They're not serious anymore. The Fed and the government thinks that they can talk away all of our problems. I mean, that is actually their strategy. They say that the Fed has all these tools in order to fight inflation or employ quantitative tightening or quantitative easing. All these tools that they have, when really the fact is their number one tool is this: their mouth, their narrative, and then their ability to spread that narrative across the country, employing the hapless media, or the compliant media, I should say. It's, they don't have tools. The only tool they have is talk, and talk is cheap. And sooner or later, their talk is going to run out. Well, it's already run out. Everyone knows it's a ruse. Everyone knows the Fed is a joke. Yet we are willing to put up with this joke continuously, day in, day out. I guess we have no choice, right? We have no power. They say the vote is the power. Well, we know that isn't true. All right, let's see. We'll go back to the charts. No one wants to look at my ugly face. Yeah, that might have been it. That was the effort to get out of T1. It made two efforts. I thought this one was a breakout, and then it just died. Wow. We'll zoom in on that some more and get a really close-up view. That's a lot of fun. We get this close-up view, and then we increase the volume profile so that we can see all the moves of the market. So we'll make that like, 80. There, and then we can see what's going on. So it seems like it's following this kind of curve here, a little bit of a curve. That's a good sign. When you get a curve like this, that's usually a good sign. Higher highs, higher lows, curving up in an exponential way, developing some momentum. And now if we can get back up here. But the only problem is that when it drops hard. And when it rises, it sort of grinds up, except for this rise right here. That was a pretty quick rise. So as they say, they take the escalator up and the elevator down. But here they took the elevator up and the elevator down. Now, see, we don't want this to fail. We need to get up and above T1. Hey, is anybody listening to me out there? Let's see. Car loans were 21.5%. Can you imagine? Oh, that is insane. Yet people survived. Yeah, but real estate on average in the 80s was only $27,000. Imagine what the average price today of $750,000 in Southern California, or even here in Southern Massachusetts. It is hitting the 5-minute opening range. Uh-oh, we have an opening range buff. Skunk Funk, I'm listening. I don't know what he's listening to. And Jeff just added a second lot for 25 cents. Good luck to you all. Come on, let's break out. We got plenty of time. 24 minutes. I don't have my watch on. Got to get my watch. Get the old Apple Watch on. Plenty of time. So if we can break up and then get above this previous high, we should have... Yeah, what's going on with this volume profile? Total. Why is it two different colors? That's weird. I don't have it set to up down, but it's still two different colors. Come on, baby. Break above here. There we go. Now, got to break above here. One step at a time. So we need to see these volume bars come in over here on the right. Yeah, we'll make it a little bit bigger. We'll make it 100. We're going to go all the way. A little bit of a battle going on here. We all want to go up. Who wants to go down? Well, I'm sure there's plenty of institutions and traders out there that are betting for it to go down. And they're see, the thing is that if it goes up in any appreciable way, then they're going to have to bail on their shorts, and then it will just shoot right up. It'll shoot up hard. Now, see, this isn't good, not coming up and making a high here. We need to make that high. We don't want to make another low. We want to stay above the T1. So anyways, once they get above this high here, the people that are holding shorts are going to bail. And once they bail, that will give it extra boost up. And then we might reach our target and jump into profit. What I need to do is what I usually do, and that is create our little profit target. I didn't do that yet. So that's where I draw the little representation of the butterfly. And we got to put that right at the market close, which is right there. We want to make that cyan, just like Thinkorswim. We'll make it nice and thick. So the bottom of that, the bottom of that butterfly is at 55. Is that right? And the top is at 75. It's way up there. So I can type those numbers in. 75. and already at 55. All right, so we got that in. And now we need to look at where the profit curve is. And it extends all the way down to 39.32. Wow. No, that's not true because I came in at 90 cents. So the profit curve is only down to 39.38. And up here around 39.92. So 38 and 92. And we'll make that guy purple, just like Thinkorswim. Make it maybe 3x. And it was 38 at the bottom, and then 92 at the top. All right. So there's our profit zones. Come on. Let's go. I have a feeling it's going to drop. That's my innate gut feeling right now that it's going to drop. And if it drops below these guys, we may have a loser on our hands. There's only 18 minutes to go. Now that's crazy. In Studio City, California, a 1,250 square foot home is about 2.5 million. Imagine if I could put my house and my property right there. It'd probably be worth about 15 million. Sapphire, hi, I'm new here. Are you trading 0 DTE butterflies? Yes, we are. But I'm not sure about the efficacy of this particular trade here, Sapphire. I'm not sure if we're going to make it. It tried a couple times to break out, and then it just lost its mojo, lost its steam. Maybe it's coming back down here to gather some up. Or maybe it's going for a new low today. Maybe that is the move. You know, we had this sort of feign retreat going up, and now this is the start of something going down. That might be what's happening. There's some orders coming in here. You can see them building. But I don't know if those are bearish or bullish. Kind of hard to tell. They don't come with tickets. Yeah, maybe they were bullish. Too many people are believing in the downside right now. But, it's the weekend. Let's start off with a halfway decent note for our sake, for the zero DTE sake. Anyways, the call was that if we broke out above the top of the T1 and got above, I think the point I was saying is 39.40, that we would take the trade, and that's what we did. It got above there because I felt that that was now entered into the territory of the LVN and far enough away that there wouldn't be a big challenge for it. But apparently there was. It knocked it down. Then it tried again, and then they doubled down on that knockdown effort and kept it down again. In West Virginia, that Studio City home is only $30K. Oh, Safara's rooting for us. All right. I want to learn this thing. Well, a win today won't validate or invalidate the strategy. I can tell you that. Because we're working on about a 78% win rate and with a return on capital averaging around 250%. So this won't really affect anything. And this was a relatively tiny trade. A little bit bigger than the one that we made yesterday. Yesterday, I think we put in 70 cents. Today was 90 cents. And so it's doing exactly what I just said. It's coming back down here to that 39.10 that we had called earlier today, which was a winning trade. And that seems to be like where it wants to be today. So Les says he still has his 3900, 3910, 3920 trade on. And that was the trade earlier today. So you must be loving life right now, Les, because you're making buco bucks. Roy says it pins at 3900. Maybe. I would bet on 3910. I don't know why, but that's what I like, 3910. I would prefer that it comes up and breaks out, but we're running out of time. We only have 12 minutes to go. So this seems like a bum trade. I don't like going into the weekend with a bum trade. That sucks. Although yesterday was a fantastic trade. So that kind of, yesterday was the kind of trade that that even if you had a whole week of losers, yesterday would make up for the losers. And, of course, we had this morning's trade, which was okay, so we're doing okay. No, Safar, we do not just trade the last hour. The last hour trade is an experiment for us. And this is my 34th trade doing it online. And I plan on doing about 100 of these online to show everybody, how we trade. But generally, our trade is taken earlier in the day. Typically mid to late morning, like our trade was this morning. So, but we are evaluating this final hour trade because it has a lot of interesting characteristics with it. For one, you have that compressed time frame, so you don't have to really, you've already learned a lot about what's happened during the day, and I guess the theory goes that you have a smaller window of time from which to try to predict the vector of the market, and then potentially put a trade on that has a higher probability of profiting. And generally, that's what we found. Now, only these final hour trades are live. Well, if you'd like to learn more about the butterflies, Roy, then just join the service. If you'd like to join, we have a 4-week trial. And you go to 0-dte.com/try. Right? 0-dte.com/try. Get a 4-week trial. And then if you decide you want to hang out with us, we will rebate the cost of the trial against the cost of the service. There is a monthly program and a yearly program. Nine minutes to go. I wonder if I can recover any of that. I don't think my trade's going to be worth anything now. But that might be a little, there's an idea. Les is out at 400%. Fantastic, Les. All right. For the trade earlier today. Most of us got out of that with about 50 to 75%. We got out much earlier today. So my trade is worth butkus right now. So what I'm going to do is I'm going to sell the, I'm going to buy back the shorts. Because they've already reached maximum profit. Not doing any good there. So then if price happens to jump up, I might be able to make some money on the remaining long leg, which is closer, which is the 39.55. So we'll see what happens there. But I don't think that's going to happen. I mean, if all of a sudden price shot up by some miracle, so let me explain what I did. I bought back the short strikes because they had already maxed out their profit-making potential. They were only worth 3 cents. Bought them back for 5 cents. So that leaves the 2 long strikes. The one that's closest to price right now, if price were to come up to the top of T1, those long strikes would probably be worth more than what I paid for the spread. But that, that's kind of a long shot. We've got less than 7 minutes to go, so it would really have to move here. I've seen it before, though. Last 5 minutes, I've seen the market move as much as 50, 60 points. I'm dreaming now. I'm dreaming. But if it does start to go up and it does get any kind of value in it, I'm going to take it off. And that will lighten my load, even though the risk that I took was practically nothing. So but it's fun to do. We have actually done a few of these buy back the shorts trades in the past. And the first 4 that we did, I think we won 3 of them, and they were all spectacular winners. And then it all of a sudden became a thing. Every time a trade would go out of the money, everyone would be saying, buy back the shorts, buy back the shorts. But, it's such a low risk move. I mean, it's a low risk move and it's a low probability move. Super low probability. It's probably like maybe 5% of the time that they actually come back and pay you off. Because right now, we would have to jump up about 30 points, basically. And if it jumped up 30 points, that short strike could, in fact, be worth a lot of money. But, we got less than 5 minutes to go, so that chance that's happening. Or should I say skinny chance that that's happening? I don't know. What's worse luck, fat or skinny? But I think that this is going to close on our original trade today at 39.10. What do you know? Now, it could be that final aftermarket push. Are they looking to really push it down so that we can all, wake up on Monday morning with a big fat egg in our face or something? I don't know. But this is where they spent most of the day today, right here. So I'll tell you the mistake I made, I think, today was I saw that this thing came up that high, and I was a little anxious to get in and got in. I'm not saying I did anything wrong. I mean, I had full intent to getting in. But sometimes I wonder, should I have given it just a little bit more time? Should I have kept to my guns and not gone for the 90 center and stuck to my guns where I said maybe something less? Not that it would have mattered very much because it was a dead trade. Of course, nobody knew that at that time. But that's life. That's the way the trade goes. All right, so far, let me be very clear. This is not an alert service. This is an educational service. We provide coaching and mentoring, and you don't just follow alerts like a monkey. You are in there to learn an entire trading system. And we're really serious about that. I am totally invested in churning out people, turning them from amateurs to professionals. And we use this strategy as the basis for that, and it's a very strong strategy. And we're demonstrating that through these trades in the afternoon. So that's what the service is about. And of course, you get to see the live trades. I do live streams every day inside the service. There's hundreds and hundreds of programmers. I'm not I keep on saying programmers, traders, professionals, trading $1 million accounts down to people with just a few $1,000s, all in it together, providing support for one another and learning this system, learning the strategies, the methodologies, and the process. So it's way more than some alert service. There it goes. Bye-bye. Now let's pull out a bit. Yeah, it tried. It really tried. We can take away this box now. It's not doing us any good. Yeah, it just collapsed at the end of the day. Isn't that interesting? And I think right now it has already put in a new low of the day. That's what it did. It put in a new low of the day, and that was it. Isn't that interesting? Very, very interesting. So as far as says, thank you, I appreciate that. That's exactly what I'm looking for. Well, I'm glad to hear that because we teach, as they say, we teach people to fish. You know, we don't give them a fish. We teach them to fish so that they can hold it for a lifetime. Yeah, I like that. Some days you eat the bear, some days the bear eats you. Yeah, that's right, Terry. It did. It hit a new low for the day. That was very interesting. Came down like in the last few minutes and just banged out a new low. Yep, incredible. It's amazing how these things work. Interesting is one way to put it. Yeah, I tried to be subdued here. You know, you don't want to get too off, you know, off color or whatever. All right, back to the big head here. All right, so wrap up for the week. We had a really good week. I think we had one non-trade, two big winners, one small winner. So that's like, you know, 3 winners out of 4, which is right around our average. And so that's good. We had one non-trade in the beginning of the week. So all in all, it was a good week. Last week was one of those weeks where we had like 1 winner and 4 non-trades, which was very unusual. So, but that happens, you know. Every once in a while, we come across a market that just isn't giving us our triggers, you know, to get in or to get in a trade. And that's fine because a non-trade is, in fact, a position. And right now there's been 6 non-trades. So out of 34. So 6 out of 34, that's not bad, you know? I mean, about 1/6. That's pretty cool. 17%, something like that. So I hope everybody has a great weekend. If you're interested in this service, go to 0-dte.com/try for a 4-week trial. We'll have our Sunday retrospective, which is our part of our continuous improvement process this Sunday, which we do every week. And we review the week's trades and go over what we've done well, what we did not so well, and what we could do to improve going forward. That is all part of our process. We are very process-driven in this. We're not outcome-driven. We are process-driven, and that's the way it should be if you want to be a professional trader. You should be focusing on your execution and your ability to do the analysis and do it consistently and do it the same way every time. And the only way to get there is to choose a path, understand what the components of that path are, build strong habits, and then follow those and continually improve upon them. And everything else will follow after that. So there you go. I hope everybody has a great weekend. Peace to you all. Thank you for showing up. Now I got to go walk the dogs. Take care.